Bitcoin is going to $100,000 in 2024, possibly $150,000, maybe even higher in 2025. Listen, I have proof for what I'm saying, not just silly pie in the sky, pulled out of my butt price predictions, okay, but cold, hard numbers that show exactly where we are going with this market, where we're going with this asset class, as well as the really very real and hard to ignore catalysts that are going to push Bitcoin to the freaking moon. So strap in and let's get it. Let's begin the conversation with Bitcoin halving. 2 months away now. On that day, the total amount of Bitcoin produced by miners is going to drop from 900 Bitcoin a day to 450 Bitcoin a day, or from $45 million a day to $22.5 million a day worth of Bitcoin being produced by miners. Inflows of fresh cash into Bitcoin ETF products, though, have actually been surging recently. In fact, hitting $500 million a day over the past few days. At least now the bleeding from grayscale selling has slowed down. Inflows been going crazy. What's that mean? Let me decode that for you. That means that Bitcoin ETFs are now taking in 10x more Bitcoin off the open market than the Bitcoin miners are producing. 10 freaking times more every day recently. Monday to Friday, excluding public holidays, because stock markets are dumb. Boomer markets are closed a lot. But still, what the actual duck, man? There are like 220 more trading days in 2024, by the way, excluding weekends, public holidays, all that stuff. So if we keep seeing $2.5 billion a week come in, and we may not, okay? Obviously, there's no guarantee of that to happen. We can see inflows drop off dramatically at any time. But so far, this is what we're seeing. We're seeing this big tick up in interest. A month after approval, they're strong and rising. $500 million a day is nuts. By the way, these numbers were just as insane in the first couple of weeks after the Bitcoin ETF was approved, but the cash inflows were met by very strong outflows from Grayscale, which sort of canceled each other out and muted any sort of price action to the upside. And to be clear, Grayscale still has massive sums of Bitcoin that can exit from its fund, from regular investors, including, of course, 1.5 billion at least from the parent company, Digital Currency Group, that they've already stated they want to sell, and they were applying to the courts to be allowed to sell. So let's run the math here. Let's do the numbers. 220 trading days, 500 million a day, $110 billion of inflows in year one of trading. This would blow everyone's predictions out of the freaking water, man. Remember, Galaxy Digital was saying maybe $17 billion in the first year of new cash inflows. If we keep the current pace, then the numbers will be much, much higher. Of course, demand may fall. Demand is not a constant. We can't account for it as a constant. So let's say demand drops by 50%, then still $55 billion in cash inflows into Bitcoin. If demand falls by 75%, it's $27.5 billion. These numbers are still mind-blowing and send us to $100,000 Bitcoin. Even just 100 million a day in buy pressure from inflows from ETFs would be crazy, because that is still twice as much as miners are producing right now, and it'll be 4 times what miners will be producing post Bitcoin halving. Look, let's consider even the most bearish scenario here for these ETF products, which thus far does not appear to be even close to the base case, but we should consider it for the sake of argument. Only $22.5 million a day of inflows happen. That would match at $50,000 how much miners are producing post-Bitcoin halving. That'd be a full 95% or more decline in inflows based on where we are right now, which feels relatively unlikely, but still, let's consider it. Even with this happening, US Bitcoin ETFs would absorb all newly created supply by Bitcoin miners. One source, gone. That's shocking, because the US Bitcoin ETFs, they're only a little piece of the demand pie for Bitcoin. Remember, MicroStrategy still buying Bitcoin. Tether still buying Bitcoin. Other companies announcing they're buying Bitcoin. There are 12.5 million addresses with over $500 worth of Bitcoin, or 0.01 BTC, indicating that retail buyers have been very active since this metric has increased by an insane 1.5 million addresses in just a year's time. So this is all proof that the demand is 100% there for Bitcoin price to go higher. Supply is getting tighter. New cash inflows are soaring thanks to the ETFs, a major liquidity event. And even if ETF inflows drop dramatically, 95% drop in inflows, we will still outstrip the supply being created. And of course, supply on exchanges falling all the time, which is actually at its lowest level in 7 years right now, with all this demand going up, 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 up. Now let's look at some charts here that support the 100K in 2024 thesis. In previous cycles, it's taken 6 months post-halving for the Bitcoin price to move back into price discovery and take out the previous highs. Using 2020 as an example, it took 31 weeks for Bitcoin to cross back over $20,000 post-Bitcoin halving. It then took 4 weeks for Bitcoin to hit over 40K. That's a wild 100% pump for Bitcoin in just 4 weeks. 4 weeks. Those numbers largely line up with the cycle before that. When the price hit a new high, 32 weeks post Bitcoin halving, with a 12-week period after which we saw Bitcoin rally 150%, which is mind-blowing. Now, before we look at the numbers from this cycle, let me just give you a quick shout out for the Wealth Mastery newsletter. Best damn newsletter in the crypto industry. Every single issue packed full of money-making alpha, altcoin deep dives, airdrops, altcoin charts, NFTs, and much, much more. Join our 100,000 plus weekly readers and sign up for free using the link down below in the description. Thank you very much. So back into it. Assuming the Bitcoin halving is in early April, which is when it's currently scheduled for, then we need to wait the traditional 31 weeks. Then we would see the old high at $70,000 being taken out in this scenario mid-November 2024, approximately. Then from there, it's only 45% to hit 100%. It's not even crazy, man. In fact, that would historically speaking be a relatively weak post-high break rally, maybe diminishing returns. So maybe it makes sense to get 100K. 100K could, in theory, happen by December of this year, according to this analysis, and maybe at the latest by February 2025. Now, there is a chance, of course, there is a chance, and this really needs to be talked about, that due to the Bitcoin ETF inflows, we could see this happen even sooner. The earlier cycle theory could be at play. I remain open to this possibility. Bitcoin ETF inflows are dramatic right now. But our base case, assuming rhyming of previous cycles, is discovery for price in late 2024. But US Bitcoin ETFs are insanely bullish for the price of Bitcoin. They're not also the only ETFs in town. And let's talk about those other catalysts. We have Hong Kong coming. We have South Korea coming. Both are likely getting into ETF games sooner than later. Hong Kong is for sure happening, with already a $250 billion asset manager in Hong Kong filing an application. The SEC in Hong Kong basically said, please, someone come and apply. They did. South Korea meeting with the SEC from the USA about how to roll out a Bitcoin ETF product in South Korea. And sure, there will be sell-side events. There's going to be Mt. Gox Bitcoin coming out. There's going to be Silk Road Bitcoins with Grayscale Bitcoin being sold. Miners are going to sell their Bitcoin. None of it matters. It's all basically irrelevant besides some kind of short-term dip. This is like thinking that spilling a glass of water in your kitchen is a big deal when a mile-high tsunami is about to take out your city. Now, it's not that the glass of water didn't matter at all. It just feels really, really insignificant as a crisis level event in the face of something much, much bigger and more impressive and terrifying. Which brings me to perhaps the key point of this video. The number one tech feature of Bitcoin right now, whether you like it or not, Bitcoiners, is getting turned on. That tech is called Number Go Up. Yes, Number Go Up technology has been activated, and it's the best damn advertisement for Bitcoin in the entire crypto space. People love backing winners. And right now, Bitcoin is winning, which will bring more money to back it, which means it keeps winning more until one day it doesn't. But that's for later us to worry about. Well, all this is incredibly exciting for Bitcoin. What about our altcoin bags, man? Our big fat altcoin portfolios of stinking crap coins, man. What's going to go on with these? Well, let me say this. The current market of crypto is the same as it was. Total market cap of all crypto coins, the same as it was in April of 2021, which is insane to think about because that was peak market euphoria. Right now, there's no peak market euphoria. It's just another day in crypto, man. We're at $2 trillion almost, or maybe over by the time you watch this video. The total market cap for crypto is going to go so much higher this cycle. 6, 7, 8, 9, maybe even $10 trillion would not surprise me at all. Bitcoin at 150K, by the way, it's a $3 trillion market cap, 200% gains, not bad. But if altcoins go $2 trillion more in market cap, then basically every top coin outside the top 10 is going to send 10x or more, 20, 30, 40, 50x. The Bitcoin ETF is a once-in-a-market liquidity event. It's the spark for this cycle. The money enters the top at Bitcoin, and then people start looking for the next Bitcoin. They look for bigger gains. Some people are going to be happy that 2, 3, 400% gain from Bitcoin. Other people are going to 50, 100x. Rich people start selling their Bitcoin for altcoins. Money starts flowing around. They take loans versus Bitcoin to buy altcoins. It's going to get messy. It's going to get frothy. It's going to be a wild ride, man. Remember to take profits, or the market's going to take them for you. Peace.